the month of September fast approaching here, and after a pretty weak month of August, we may see a little bit better performance in the month of September as we get ready for that kind of end of year push as we start to go forward. There's certainly some things that can weigh on the markets in the next month. Here's what you need to know before the bell this morning, though. The market, of course, having a very sloppy month so far. In fact, this has been a rare month of August. In fact, during the month of August, the S&P was not able to string together more than 2 positive days in a row. That's a fair rarity, historically speaking. But again, 2 things have happened. First of all, the sell signal has gotten pretty oversold here, starting to flatten out, and the market kind of basing right here around the 100-day moving average. Relative strength is improving here a bit, suggesting that you get a little bit more push in the markets over the next week or so. But the month of September fast approaching here, and after a pretty weak month of August, we may see a little bit better performance in the month of September as we get ready for that kind of end of year push as we start to go forward. There's certainly some things that could weigh on the markets in the next month. China obviously under a lot of pressure right now from real estate, finance, debt, etc. That liquidity injections that have been pushing in by China have not really been working. More importantly, kind of keep a watch on the dollar. Dollar's been rallying strongly lately. That's starting to pull some of the strength out of some of the areas that are sensitive to a stronger dollar. Also, keep a watch on interest rates. Interest rates, of course, after the Fed's meeting last week, suggesting that the Fed could hike one more time as we get ready to move into the end of the year. About a 65% chance of another rate hike by the Federal Reserve before year end. Now, of course, the long end of the curve has not really been rising. Even though the Fed keeps hiking rates on the short end, the long end of the curve has been stuck between about 375 and 425, right around there. So again, that hasn't really been impacting a lot of that. But on the short term, these higher interest rates are affecting things like credit card payments, etc., which are going to start impacting consumers. And of course, as we start talking about weaker retail sales going into the end of the year, if those begin to show a kind of a slowdown as we get to the end of the year, that is going to put pressure on some of the other areas of the markets. Macy's, Dick's, Lowe's last week, all kind of hitting the warning bell about a slowdown potentially in consumers. But for right now, though, the S&P remains fine. There's nothing to really be worried about. Watching the sell signal. If the sell signal does turn back into a buy, we can probably increase some exposure here for a bit of a rally into next month. That's what you need to know before the bell this morning.